everyone. For those of you who don't know me, I'm Ann Olazabal. I'm the new interim dean for the business school. Been here 26 years, so I know many of you, but it's great to see so many students out here this morning. We are, it's a pretty exciting day, right? I can feel the excitement on campus. This is something a little different for us. We do sort of pride ourselves at the Miami Herbert Business School on having the most engaging experiences and best speakers for our students. And so today's sort of an evidence that we not only walk the talk, but we also pave the way here at the University of Miami. We are just thrilled after many months of planning to be able to welcome Jim Cramer and his team from CNBC, at least one of whom is a UM alum. There she is. Go Canes. So just a little bit about Jim, you probably already know, but Mr. Cramer is a leading voice in the financial world. He's an author, he is a financial commentator that many of you are familiar with, and of course he's the host of Mad Money, the CNBC financial advice show. He's been a leading voice in the industry for a long time, so I think it's really a great opportunity for you, our students, to get an opportunity to learn from him, to take his insights on business and the financial industry out into the world as you graduate. Without much further ado, I just want to welcome and thank Jim for being here today. I have no doubt that this experience among the others today will be not only insightful, but memorable, if you know Jim's personality. Students, please come this afternoon to the live taping over by the band, at the band shell, if I'm not mistaken. We'd love to have you there to take part in the live taping and be part of the audience on TV. And before I hand the mic over to Jim, let me just introduce someone who needs no introduction. Let me welcome President Julio Frank to the stage for just a couple of remarks.
Good morning to everyone. Thank you, Ann. Thank you very much. I want to add my very warm welcome to Jim Cramer and the CNBC team to our beautiful campus here at the University of Miami. I'm sure that this warm climate is a welcome break for you and your team. So we're delighted to host you here. Jim, really thank you for taking time to visit our university and engage with our students because, you know, the most important thing we do here is take these promising young people and try to develop their full potential. And that happens happens in classrooms, but you know, with the dynamism of the economy, the job market, the complexity of the world today, that is just not enough. They need the sort of experiential learning that comes from engaging with, you know, people who have excelled as you have, and who provide role models, in addition to your substantive insight into the world of business, which I'm sure is going to be extremely, extremely enriching. We call our strategy here education for life, which means educating or learning throughout your entire life. It means also learning to lead a meaningful and rewarding life as part of your educational experience at this university. And that requires an expansion of the capabilities we develop, but it also requires the sort of immersive experience that comes from engaging with a celebrity, if I may use that word, like yourself. So we really appreciate what you're going to bring during this Q&A and then later on during the live taping. We're grateful that you're here to answer our students' questions, and we're grateful that we'll be featured in your show with the taping later today. So please join me in giving Jim Cramer a very warm Miami Hurricane welcome.
Dean, President Frank, thank you so much. Let's get serious first of all. Don't need this get up. Do I even need a mic? Honestly, I need a mic? Holy cow, what's happened to me? I must have gotten old. I want to welcome people. I want to give my crew, to your crew, a warm thank you, because this is an honor. We haven't had a real college tour. We've been to some schools, but the back to school college tour since we were at Nova, where I'm from in Philly. And I think the way to start a college tour is to come here at the Herbert School. There's a level of interest I love the idea of lifetime learning because I shut it down. I shut it down when I graduated because I wasn't from your era and didn't understand the idea of lifetime learning. I understood the idea of having no money and trying to get some money, but that was like the concept that I came out of school with. And there's more to life than that. Even though I'm the money guy, and I often say I'm a dollar sign represented by a man, I think that the Herbert School is teaching you right. We're thrilled to have our class tonight. I want to say something and give you a little preview of some of the things I'm going to say tonight. But one of them is that I want people to put some money away. I always hear that people say, you know what, I'm in school, I can't afford it. Wrong! I lived in my car for a year. I was interviewed by this terrific woman. She said, where do you live in Sacramento? She's from Sacramento. And she mentioned the town. I said, I live near 10th and P. She goes, which building? I said, no, that's where the police let me park and sleep in my car. But I put money away. I gave money to the Fidelity Contra Fund every single month. Sometimes 100, sometimes 50. Living in your car, don't have homeowners insurance, took that money away, put it in school, put it in money. But I'll tell you what I did. I made a lot of money. And I wasn't worried about the Fed, and I wasn't worried about all the stuff that we hear about that's too short term. I just put it away every single month, whatever I could do. So I want to remind people that being at school is not an excuse to not save. And too many people do it. I even favor some speculation, but I'm talking about speculating wisely. But in this particular market, you can actually do some analysis because you guys are way ahead of the people, most of the people who watch the show. You can do analysis. You know how to do it. Put $20 in it. Buy a fraction of a share. I don't care. That's what my kids do. They buy fractions of a share. My kids are not really kids anymore. They're 28 and 31. But I just think this is an amazing opportunity to get me involved with the people who matter and who care. This is a select group of people who really understand what the heck they're doing. And so I want to help you right now with any questions you have. Introduce yourself. Tell me where you're from, your name, and let's try to make some money together. So who's up first? Thank you. Thank you. All right. Your name is? Antonio. Okay. Antonio's a junior. Thank you very much.
Thanks. First off, Mr. Cramer, I want to thank you for being here.
Oh, thank you, man.
Yeah, very famously 10 years ago, you coined the acronym, which was then 4 letters, FANG, right? Just yesterday I watched a segment of yours in which you very enthusiastically and actually more than once proclaimed that FANG is dead. My question for you is, what's a company that you see in the public markets today that's, in the front running to earn themselves a letter in your next acronym of tech greats?
First, it is the anniversary. Actually, yesterday is the 10th year anniversary of FANG. And when I said that, and that's Facebook, Amazon, Netflix, and Google. And obviously, Facebook became Metaverse, and Google became Alphabet. The reason why I didn't want people to focus on it anymore is that I think that those companies are good companies, but they're no longer the cutting edge. And anyone who listened to Mark Zuckerberg last night on the Meta call, there's this moment where he's very wistful. And he says, we used to be a growth company. We used to be the hot company. We're not that anymore. We got to fire people. We got to buy back shares. We got to demonstrate to people that we know how to make money, and we're not just a bunch of yahoos. And that's why I wanted to say, let's put FANG away, because FANG is no longer the kind of cutting-edge company that I think is going to be the next big thing. And I think people want the next big thing all the time, but they're not going to find it in conventional places. What they're going to find it in is a company like Mastech, which is located here, but is not a major company in the country, but we're going to have the biggest infrastructure build of our lives. So what do? You buy Mastech. You buy prosaic companies like Caterpillar. It's not going to be able to fill the orders for how many machines that they need because of infrastructure. But if you do want to speculate, or you want to do something that is a little bit cutting edge, you buy a stock like Eli Lilly. Now, I'm looking very fuddy-duddy with these, and I'll give you some stuff that's hotter, but Eli Lilly has a drug called Mounjaro, and in another 3 months, it's going to get approval for FDA for weight loss. You lose 15% of your body weight within 6 months. Now, it's for obesity, but I think that this is a drug that everybody's going to take. This will be the largest drug, I think, ever. So I like a stock like Eli Lilly, which is down $12 on some very short-term things. So I'm always looking at where people aren't. Right now, people are looking at just tech, and tech moved up. I would have said like 3 months ago, look, there's some tech opportunities. I still like Apple. Own it, don't trade it. Reports tonight. I don't think it's going to be a good quarter. I would buy it when it comes down. But we're going to introduce some of the stocks of tomorrow in the show tonight, and I'll give you a preview. We're talking about Airbnb. Now, how many people have used Airbnb here? Okay, there. How many people have stayed at Marriott? All right, pretty much the same. But Marriott's stock is much bigger than Airbnb. And Airbnb people don't believe it. They just don't. They don't think it's for real. They don't because it came public at a weird time, and that its stock went up really big, and now it's pretty much crashed. But that's the kind of stocks that I'm looking at in terms of junior growth. So I'm doing senior growth probably at the top, then junior growth in a segment that I'm writing right now, and then how to speculate wisely in my last block. But the next fangs are not going to be tech. And they're not going to be tech because tech has become, and I don't know, has anyone ever worked at a venture capital firm as an intern? Okay, so here's what happens. Because my son works at them. All they care about is enterprise software. Enterprise software. And yet that's the most over-glutted, people have made too much money or they're now laying off people. That's what they focus on. And that's what I don't want to be in. And yet that's where people think is cutting edge. So I don't want to be in what people think is cutting edge. I want to be in what I know is cutting edge. And it's not what the consensus wants. If you're with the consensus, you won't do any better than the consensus. And I always want to do better than the consensus. So thank you. I know that's an unconventional. You probably want that it's Biohaven, a company that is working on Alzheimer's. And I like it very much. And I know the CEO, and he's a terrific guy. But I don't think he can do it. So I don't want to put people on a stock that I think the company's going to fail. But that's the kind of speculation people want to do. At least I have one that looks like it. But I don't like speculation unless it's done wisely. So anyway, who else? Oh, in the orange shirt? Can we get the mic? Oh, I'm sorry. I should have gone. Well, can we just move it? All right, we'll take whoever you've got, and then we'll move it over. I'm sorry. I didn't mean to be rude.
Thank you. Hi, Mr. Cramer. Thank you for being here today. My name is Marissa. I'm a healthcare MBA student here. I'm originally from Philadelphia area. So with that being said, go Birds. We're going to win the Super Bowl this year.
Yeah, I got good seats. Well, I won them in a charity auction. And there's a guy next to me, Ken Gome. He's a big donor. He made it so that everybody who goes to NYU Health, who's a doctor, wants to be a doctor, doesn't have to pay any tuition. I love that guy. And he turned to me and he said, "You're buying this." And I said, "Well, I don't even know if the Eagles are going to be the Super Bowl." He said, "They're going to be in it. Just buy this package." And I'm bidding for this package I figure it's going to be like the Chargers versus Dallas. But we won. It was the greatest thing. The charity made a lot of money, and I'm getting to see the big game. So anyway, how can I help you?
Thank you. So my question is that given all of the news surrounding FTX and other recent developments, would you still be bullish on cryptocurrencies? And if so, which one? And what percentage of my portfolio would you recommend?
Okay, I think cryptocurrency is crooked. I think that I think it's crooked. I think it's made up. I think it's rigged. I think it's rigged against you. I don't think people realize, if you go over the Sam Bankman-Fried report, he rigged crypto. Now, there have been rigged markets. Jay Gould rigged the gold market by getting close to President Grant. Didn't go to jail, but he rigged it. American Rascal, fabulous book. But John D. Rockefeller rigged the oil market and got broken up by Teddy Roosevelt. Sam Bankman-Fried, he rigged crypto. And I can't be in a rigged market. I also know that there are a lot of people who not only misunderstood the asset class, but kept their money, their crypto, in places that went under. Who would actually go in 1932 to a bank that didn't have FDIC protection when they initiated FDIC? So I can't, in good conscience, recommend a rigged market. People want to make money. We mentioned you're from Philly. I'll tell you what I think is more honest than crypto. If you take the Chiefs getting 2 in the Super Bowl, because gambling is more honest than crypto. Jason Robbins is a friend of mine. He runs DraftKings, and I trust that market more than I trust crypto. So that's pretty much how much disdain I have for that non-asset class that people want to be in. I will reiterate that tonight. Thank you. You guys go to business school. You know the deal. You know what rigged is. He cornered the market. Did he take you in? Were you allowed to be in? My daughter was. She got killed. Got crushed in it. Everybody's crushed in it. Enough. Let's make money in real stocks. Let's buy America. Who else? Up, here we go. I called on you earlier. We didn't mess around.
Hi, my name is Yuval, and I'm part of the Masters in Leadership here at the Herbert Business School. I also am a employee. My question is that there are a lot of investment trends that have gone viral on social media in the last 2-3 years that the next generation of investors are being exposed to. So the latest one that I've seen is using life insurance in order to borrow money in order to make larger investments like buying property or real estate. So what advice would you have for these impactful viral investment hacks that people are coming up with? And what do you recommend for the younger generations to do when they're looking at these videos and how to invest their money?
Okay, there's a stock called Louisiana Pacific, largest maker of lumber. Those people are dumb as wood. You don't do that stuff. I mean, that's incredible. First of all, you don't even borrow money to buy stock because it's just, you can't live in it. You know, you can borrow money to buy a house. But you borrow against life insurance. I mean, these are the kind of things that I hear about, and I want to strangle the promoters because the promoters want your money. That's their whole game, is they want your money. I do, by the way, I was very early on in liking Twitter when it came public, and I liked, do you know that I'm top 10 hated on Twitter? I met the CEO. We had dinner with him, me and my wife. Guy's Prague, nice guy. And he said, what's it like being a top 10 most hated people in America? And then he stopped himself, actually, in the world. I said, well, what do you mean? He goes, well, right now, you and Putin are neck and neck for most hated person on Twitter. And so my wife says, where is he in the most hated in Twitter? And Prague said, he's MSD. And my wife turned to me and said, what's the MSD? I said, mid-single. I was number 6 that dinner. So I know social media. I know how to try to tamper with it, so to speak. I know that Musk didn't mean to buy it. I did huge position in my charitable trust in Meta. I had been very close to Meta for a long time, from the days when I was basically summoned by Zuckerberg to go talk and understand Meta. And I've liked it for a long time, and it did very well. But again, that's mature. Like social media is something that the venture capitalists say, still a great opportunity. It's mature. So if I'm going to be immature, I'd rather be in Caterpillar, Illinois Toolworks, Dover, Parker Hannifin, Boeing. Those are the stocks I'd rather be in. The only one of those mature that doesn't have a good balance sheet that I recommend is Disney. And I recommend Disney because it's so screwed up that it can only get better. So let's buy stocks that are of companies that are so screwed up they can only get better. Let's not borrow against life insurance. I'm going with you because you got Eagle Green on.
Oh, never mind.
Oh no, your shirt. You're obviously an Eagles fan, but maybe just by happenstance.
How's it going, Jim? Thank you. So I think that market conditions right now are showing cracks in a lot of companies, as we see, which brings us to something that's pretty hot right now, which is activism. How do you find arbitrage in more and more of these activist strategies, for example, like Salesforce at the moment?
Well, a great question. Okay, so Salesforce is under siege from 4 different activists. I recommended Salesforce at $8 in the show. I always say at the beginning, the show's not about friends, it's about money. But Benioff is the only CEO other than Indra Nooyi from Pepsi who was invited to my wedding. And it had 508 people, so it was not an exclusive group. And I think that Benioff is under tremendous siege right now, and he's really under siege from Elliott Partners, big hedge fund activists, who wants, I believe, to change the whole board. I don't want to say how can you lose in Salesforce given the fact that they're 4 activists, but you're going to make a lot of money in Salesforce if you own it. And that's because I believe that there'll be some sort of peace made, but the company, like Mark Zuckerberg last night, will have to admit that it's not as much of a growth company as he did, and he's got to cut even more people. My daughter goes out with a kid, a nice kid. Change of heart there. Just kidding. But he worked at Facebook, and he's really, I think he's a genius. Just amazing, and he knows sports better than anybody, but he also understands programmatic. He understands exactly how advertising works. He was put in charge with some other people about how to get more people to go to to their Facebook or really go to their Instagram page. And a bunch of ideas. People used to go to their Instagram page 7 times a day to look at posts. Now they go 2 because so few people are posting. And he was in charge of trying to figure out how to get more people to post. And then one day he came in and he was fired, along with his whole office. And you can tell when a company's serious when they didn't even bother to look at who was good. Now, would I do it that way? I think I had to work at a company where I had to fire 150 people in a very short period of time. And the people underneath me didn't want to do any firing. And I said, listen, I'm going to pick the names out of a hat if you don't fire, because the institution must be preserved. Now, that is what people regard as the man's view. But when you listen to Zuckerberg last night, he was saying, look, I understand the institution has to be preserved. I'm not going to fool around anymore. That wasn't an activist situation, but that's where Mark is in Salesforce. And he did let go 10% of the people, announced a $50 billion buyback. But the activists want him to let go 30% of the people, and they don't want him to be CEO. Somewhere in there is a stock that goes to 200 from 175. Not necessarily the way I'd like it, because Mark's my friend. But the way that it gets there doesn't really matter if it gets there, as long as it's not crooked. And it's not crooked. Yes. Well, the front row, overrepresented in terms of questions.
Hi, Jim. Thank you for joining us.
Thank
Great
you.
to have you here.
I got to tell you, it's incredibly fun here. And so many people have asked for their pictures with me. And I always look around. President Frank called me a celebrity. My wife always says, never forget, you're a mosquito celebrity. Mosquito. She's from Queens. It's really mosquito. Even I from Philadelphia know that. But I never forgot who I was as a guy, a hardscrabble guy, who didn't do it right like you guys. I got to where I had to go, but I didn't do it in the way that you did. And I really applaud that you guys are taking it seriously, doing it right, doing it for life. Whereas I tried to short circuit it and went completely upside down. Go ahead.
Oh, no, so I'm Robert Locke. I'm in the full-time MBA program.
Fantastic.
So I have a handful of money in index funds, and I have a handful in individual stocks. I'm curious about your tips for kind of keeping up on the research for the individual stocks that I have and formulating an investment thesis. Because I read the financial press, there's so much information out there that sometimes it's just overwhelming, and it's like, what should I focus on? It's not that I don't want to do the work. It's just sometimes like, where should I be focusing my attention? What resources should I be looking at? How should I think about these things? So
sure, great question. Well, I do want to be self-promotional for a moment because it's something I came up with and I've been doing for a long time. It's actually an anniversary for CNBC, which is I created a club, investing club, to do just that. The people who are in it are you. They want to pick some stocks. They want some tools. They don't necessarily want to buy what's in my charitable trust. They want to know how to do, as I call it, the craft. I always call it the craft because when I first got started, Gene Hackman was an investor. Gene's not able to act these days, but he came to see me for 5 days on the set. He just said, look, I love this show. Let me show you how to do it right. Gene Hackman gave me 5 days of training. But he always said, Jim, what you have is a craft, just like acting. But you have to teach the craft. You got to teach the craft, not tell them the stocks. Because maybe you're not there one day, maybe they want to pick their stocks. So that's what the club is about, is teaching the craft, going behind the scenes, and allowing you to realize, well, wait a second. Estee Lauder is down 14 this morning, but Cramer said that China is the biggest market. China had lockdown. No one wore makeup if they weren't allowed to go out. Lockdown over. Next quarter, they're going to be going away. Cramer says that's the kind of thing, think about the future, not the past. Next thing you know, that $14 down 14 is up 1. Now it's kind of middling right here. But that's what I teach. I teach look at the future, not the past. I go over the particulars. I want to go over the balance sheet. Obviously go over the CEO, fabulous CEO, Fabrizio Freda. He's from Palermo. He's a terrific guy. Worked at Procter & Gamble for 15 years. So I'm looking for stocks that are down and teach how to buy a stock that's down, teach you how to not be in a stock that is hot if it doesn't have a balance sheet. All that stuff, it has to be taught by me. But that's the craft of how to make money. And everyone in this place, anyone who's at the Herbert School, would understand the craft if doesn't do it already. But just before we ask another question, the thing that you said first is important, index fund. I invested in index funds until I had $10,000. Once I had $10,000, then I thought I could buy an individual stock because index funds are diversified, and that's the only free lunch you get in investing. And that's been, because you reinvest, that's been a fantastic thing for me. I did it for when my kids were born. I did the Uniform Gift of Minors Act. I'm not bragging. I'm just saying if you put the maximum that you could do, $15,000 for your kid in Uniform Gift of Minors in an index fund, and you're a 31-year-old, and I started when she was just born, you had $1.2 million. And all you had to do was put it in an index fund. Now, I was fortunate enough to have the money to be able to have the $15,000 contribution. But think about the reinvestment. Think about what she has. Now, she's a knucklehead in that she tries to live like in an ashram. She lived outside for a full year, which I thought was like, okay, I don't know. I like inside. She liked outside. But she doesn't spend any money. She saves it. And the reason why she saved it, she says, Dad, you saved it. I want to save it. I want to have it when I get older. And I think that saving an index fund is unbelievable. It was a free lunch. And I'll never forget that. And you have these people who will say, hey, you know what, you got to sell today because Jay Powell said this. I know Jay for a long, long time because I'm really good friends with his wife. And like Jay's a really good guy. And all these people were saying what a knucklehead idiot he was. And I was saying, they don't know him. They don't know. He's common sense, but what he cares about more than anything else is the worker because he's compassionate. I always felt his wife was a known communist because she cares so much about the worker. I love her for that. But we cannot trade in and out when we do index funds. We never touch that money. And we try to put $10 each month and $20 each month. And then once that's up to where you've got $10,000, then you can buy an individual stock, and then we can learn the craft. And there is a craft, and we'll teach it to you in the club. Uh-oh, here we go.
Hi, Mr. Cramer. My name is Fritz Lowy. I'm a grad student at the MSF, Master of Science in Finance. And
Natural science?
Finance.
That's hard. You always had to avoid those classes. Remember, like I walked into a philosophy class, and there was this big equation on the board. And I said, I'm obviously in the wrong room. And then I walked into a French lit class, and you had to speak French. Wrong room. You know, natural science, my hat's off to you. You got to be smart.
You do. I'm from Colombia, from Barranquilla, where Shakira and Sofia Vergara are from. And I have more of a macroeconomic question. So this is the following. Labor participation rate is lower than the pre-pandemic levels. Credit card spending is continuously increasing, and personal savings rate has been dropping. What could you see this combination developing into?
Look, I think education is vital, and that's education. You know, credit card, here's something interesting. Before the pandemic, the interest rate on buying a car was 3%. Now it's 6%. Before the pandemic, credit card was 10%. Now it's 20%. I had 8 credit cards when I graduated from law school. I borrowed some money to pay stocks. Big hit in Chevron. But I bought, I didn't want to. I had to pay one credit card after another. And I was always shocked that when it's 18%, it's just kind of like that's the money that unsavory underworld people would try to get. And that's credit card. And I think we have to teach people to get off this. Now, my friend Susie Orman, the bedrock principle that she had was that if you borrow money at any level, you're going to be a slave. You can be a slave to Capital One, slave to Ally Financial. So we have to teach people not to borrow. We also have to teach people, look, I borrow against a house, and I feel horrible about it that I did it because I don't like it, because I was poor, and I feel very insecure still about buying a house with borrowed money. But at least I can live in it. But you can't live in a lot of things people borrow, and people who borrow for crypto, well, I bet you they're done. They probably have nothing. And my goal, I've got to be sure, first of all, that you don't have nothing. But we have to educate people that borrowing money is virtually, and this is a throwback today to 1890 and William Jennings Bryan, but that you're going to be crucified upon a cross of gold. And I just can't have anybody who I'm in contact with at the Herbert School or anywhere that's crucified upon a cross of gold. And that's what happens when you use borrowed money. And we have to teach people that it's wrong. And if you don't have the money, buy now, pay later is not the answer. What you do is you save up and get the money, because you don't want to be a slave to people who charge you 20% interest. You'd be a slave to somebody who charges you 3% interest because you can get 4% on the 5-year. Well, actually, on the 2-year, you got 4.01 today. But we have to teach And that's one of the reasons why I'm here. I think everybody, I love President Frank's notion of education for life. It's never too late. I thought it was too late when I got before I went back to Harvard Law. Between Harvard Law and college, I had 5 years off. And I did not do anything right. And I certainly was not educating for life. I think my degree was in Jack Daniels. Very thorough. And then Kesha writes a song. She's talking about brushing your teeth with Jack Daniels. I'm like saying, ooh, geez, I actually did that. But, that's what you had. I was living in my car. I had an Axe. I had a 22 caliber. And I had powder. And I had Jack Daniels. And that's all I had. Everything else was stolen. So I always remember that day. Every day when I ever think about borrowing money, I keep thinking about what it was like in that 77 Ford Fairmont with the hatchet and the gun and realizing that's all I had in life. And I never want to go back there. And that's the way I think. I'm lucky enough now to have that experience because I know what you never want to be like.
Hi, Mr. Cramer. Oh, thank you for taking my question. My name is
I'm always
Zach.
looking for my dad when you say Mr. Kramer. That's right. He's 92. He went out strong.
My name is Zach. I'm a senior here, majoring in real estate.
In real estate?
Yes.
Oh, I ought to get my wife here. My wife is a real estate broker.
Oh,
She
that's
loves
awesome.
real estate.
That's awesome. I was born in Delco, actually, so go Birds.
Thank you.
Again. And so my question is, a lot of REITs are trading way under net asset value, across different sectors. So considering many people see them as an inflation hedge, do you think that people should be looking more into REITs as a buy?
Yes, absolutely. And I'm going to give you one that I think is terrific, even though the guy who runs is a giant fan. Oh, that Coach Gables was pretty good this year. Federal Realty. Okay, this is a company that raised its dividend during the height of the pandemic when everybody said it couldn't. It's shopping malls, okay? They're different from shopping center. A shopping center is an enclosed mall, and you're kind of trapped in it, okay? A shopping mall is enclosed. A shopping center is anchored by usually by a supermarket, which people have to go to no matter what, and has all the kind of things that you want. It might have a yoga gym. It'll have a hair salon, but it also have more some upscale chains. And that stock is valued as if we're going to collapse. A lot of the REITs I would have recommended one time, but because of work from home, you can't, would be the office REITs. But I just think this Federal Realty is just dynamite. So I'll just give you that name. You get a little more than 4%. And Don, whom I've known for many years, I called him. I said, how the hell? You shouldn't have raised your dividend, your distribution. Don't you see it's a pandemic? And he said, I raised it because of the pandemic, because I wanted to show people I could. And on the conference call, which I always recommend people listen to, oh my God, one analyst after another was calling him a knucklehead. And that was one of the greatest moves ever made, was he showed confidence. And we all want to see confidence. And that man has confidence, and that's the right REIT to buy. Oh, right here.
Hi, thank you so much for doing this. I guess
This is what I would do. You understand? This is what I would do. I covered FSU when I was a Tallahassee Democrat. And I thought it was the greatest city in the world. I always want to go back there. I love Florida. But this is where Florida really is. I was in Tallahassee. But this is like the greatest city in the world. So I would like to do a whole tour of Florida colleges.
Awesome.
But I only go on the one, and I'm going the best one. I ain't going to Gainesville. Why do I want to go to Gainesville for? No. Go ahead.
So I think it's needless to say that AI has taken off.
Yes.
So with that being said, how do you see the evolution of artificial intelligence change the face of edtech stocks as students begin to utilize this software more and more?
Okay, I'll tell you a story. So there's a company called NVIDIA. Anybody know NVIDIA? Okay, so I go out there. This guy, Jensen Huang, he's a genius. He's the smartest person I ever met. And he says, come in this room. And I go in the room. And he says, I want you to imagine this is a canvas. And he switches the thing and he puts it on. And it's a canvas. And he says, what painter do you like? I said, I like Cezanne. He goes, then why don't you draw Cezanne? I said, I can't draw like Cezanne. What, are you kidding me? I didn't even go to art class. He goes, just imagine it. So what do you want? I said, okay, I want an apple, a pear, a banana, in a bowl on a table with sunlight. Poof! Cezanne. I made a Cezanne. And I said, how did you do that? He said, okay, come over here. Here's the theater. What do you like? What's your favorite play? I said, Henry IV, Part 2, Shakespeare. Oh, yes. He said, we'll do Agincourt. And then next thing you know, in the fourth row of the Globe Theater, there I am, and there's actors doing Henry IV, Part 2. And then he took me to me. It was me. With my voice inflection, everything. He said, you're very hard because you have a lilt at the end of your sentence. But I talked to myself, and myself knew more than me. And I realized this is it. This is what AI is. Fast forward to Chat GPT. That's NVIDIA. Now, after I did all those things with Cezanne, where I painted my Cezanne, I named my dog NVIDIA. And then I got a badge for my dog to be able to go into NVIDIA. That is AI. Let's not fool around. Zuckerberg can talk about AI. I know I got to go. Don't pull the whole. Let me say a couple more minutes. So Zuckerberg in his call last night, he says, well, yeah, we do AI. We got AI. We had mentioned AI, I don't know, about 20 times. That's NVIDIA. That's who it is. And I said to Jensen, what's it like to work with Mark? And he said, look, we get the job done. I said, come on, what's it really like? And he said, we get the job done. And so all of that, everything is NVIDIA. So whether it's ad tech, whether it's paintings, we haven't even seen painting. You know, the paintings haven't been released yet. People don't realize that you'll be able to draw. You'll be able to do cartoons. You'll be able to do anything. Be any artist you want. That has not come out yet. You can do cartoons perfect. You can actually draw a scene from Star Wars perfectly. And all it is just imagine in your mind, and it's on a screen. How can you not own that stock? NVIDIA, core holding of my club and my charitable trust ever since we started it. I see Regina Gilgan, who's my executive producer, which means one of two things. One is that she's really happy to see me, and two, she knows I got to quit. And you know I don't want to do that. And I don't want to let President Frank down, who is from an amazing country, that my wife spends more time in than she's with me. Well, I don't mind. It's okay. No, this doesn't go back to her. She will find out that I said that it's okay. One more, wait, one encore here. I get one more. I'm just kidding, but she does. She's in Puebla. Puebla, she thinks, is the greatest city on earth. But you told me we already had 600 people and we're full. Oh, if you're from the Herbert School, you get good. I want to reserve for the Herbert School. These people have game. All right, one more question. Okay. Yeah.
Hi, my name's Devin. I'm from New York. And you mentioned earlier a lot of the hate you get on Twitter. And so kind of playing with
I'm ready for him.
I'm curious how you feel about Tuttle Capital Management filing for the inverse Cramer ETF.
Never heard of it. Thank you very much. Thank you.
Thank you again, Jim. And as we said, if you didn't get a chance to ask your question, there's a table at the front. Please talk to the CNBC crew. And of course, come this afternoon to the live taping if you're able. Be part of the live audience. Thanks for coming today. And thank you again to Jim Cramer for being here.
Oh, thank you so much.